What have you seen since we've had the international conflict and the rate increase kind of paired together? I've heard a lot of people say the market sort of slowed down a little bit. Have you seen that in your market as well?
Within the last 2 weeks, we've seen showing activity fall off a cliff. Literally, showing activity has dropped by 60% in a 2-week period.
Mm-hmm.
So there was 100 buyers out looking last week. There's now 40 looking this week. And it's not because they've all purchased properties. There's literally the less people going out to view homes right now.
I don't think this demand goes away, but I think it does present an opportunity. I think, the same thing when the lockdowns first started, we saw every market sort of took a little bit of a dip. And then after a month, it was hot as ever. And
you got it.
No one can say that's what's going to happen here, but people are doing that wait and see thing. And that seems to be where a lot of opportunity happens. Welcome to the Canadian Real Estate Channel. I'm Andrew Hines, taking over the channel for the month to do our market updates. Today, I have Zack Brittain here to give us an update. Zack, thanks for doing this.
Yeah, Andrew, pumped to have you on the show. As you guys have seen the videos before, or if you're brand new, my name's Zack Brittain with Phipps Brittain Real Estate. Myself and my partner, Matt, are here in Waterloo Region. Work with buyers, sellers, and investors. And today we're going to do a market update, Andrew. We're going to get you up to speed on everything you need to know about Waterloo Region real quick. Then we're going to dive into some deals for investors, some recently sold deals that you should be looking at, some active deals that you can look at right now if you're in the market and you're curious what's going on. And Andrew, we're also just going to work through which deals we think are good fits for the different types of investors. I know awesome. On the shows that you do and on the Canadian Real Estate Channel, lots of different types of investors. And a big thing that we get from a lot of people is, what types of deals fit for me. We won't necessarily talk about what are great deals in specific price points, but we'll cover pretty much anything from $750K up to about 1.5 to 2 million. I'll give a few examples for each and even have some live deals. So if there's people hunting right now, these are properties that if they're still available when you watch the video, that you guys can come take a look at. Okay.
Very cool. Yeah. And we won't necessarily go quite as deep as I might go on my podcast into specific deals, but I saw a little sneak peek of your presentation and I'm super excited to see what you got here. So why don't we dive into it?
Yeah, awesome. So let's get into the market right away, guys. Here's what we're going to cover today. We're going to talk Waterloo Region, investor hot list, duplexes, some deal analysis real briefly, and then a Kitchener-Burr opportunity that's actually on the market right now. But for Waterloo Region, we're going to talk inventory, we're going to talk prices, and we're going to talk showing activity. So for these, we look at hard data, Andrew. As real estate agents, we do get access to it. Majority of this stuff is very accessible for investors as well. If you as an investor, if you're watching this video or you want to collaborate on data, you need some links, or you just want some more information about specific market segments, that is something that we are happy to provide. And I think gives a lot of context for investors on the type of market that they're getting into if they're not super familiar with Waterloo Region. A lot of people on this channel are looking at different markets, different types of deals and numbers in each area. And kind of getting that first look at what a market's like and what it's doing will give you perspective on what you're getting into. So you're not just diving in blind. I think that would be really powerful. So we're just going to tab over to those real quick. Okay, guys. So first data that we're going to go over is month supply. So this is essentially what we refer to when we're talking about inventory. This is taken off InfoSparks. This is through our ITSO real estate system, our matrix system that we have access to. This is data that we share with our investors or anybody that's really curious as well if you can't get your hands on it. This helps us keep perspective on the type of market we're in. And I'm going to go through a couple key points and notice some trends here, Andrew. Obviously, you're noticing it's not just a straight line. We got a lot of ups and downs, right? One thing I want to just right off the top, guys, months of supply, homes for sale. This is all listings in Waterloo Region from 2017, right? And this is months of inventory. If we're below that 2.5, we're definitely in a seller's market. We barely touched above 2, and this is 5 years now.
Yeah, that's the common theme across Ontario, really. In certain cities more than others, but I mean it's been like a 5-year boom, right? Where prices have been on their way up. Demand's been high. We've had high immigration. We've got, more demand than we have supply, which is why we've seen those prices continue to go up. But of course, yeah, right there at the end, we're seeing less and less months of supply, which is probably an indication of why our prices have been rising so quickly.
Yeah, you got it. And look, we've talked about this before, guys. This is just important to note, gives you context on the market and what type of market we're in. We're in a seller's market. As buyers and investors that are looking to purchase, this is important to note because you're likely going to be competing. There's not enough homes available for people that want to buy them. But what I really want to note here is, boom, December 2020, inventory was as low as it had been, right? And then again, December 2021, about 2 months ago, lowest as it ever has been. Then inventory picks up, right? That's leading into seasonal trends. Southern Ontario, our winter markets are quieter, the weather's crummier, more people want to list and move in the spring and the summer. That follows seasonal trends. Now we're going to take a look at sales prices. So we'll go median sales price, and you can pretty much match up jumps in prices to the lowest points of inventory, right? So this is December 19, it jumped 42K in 2 months. That's almost a 10% jump in the first 2 months of the year, right? Then we're going to go over here, right here, November, December, lowest points of inventory for 2020 was December to January, up 60K, up another 40, 50K. The market took a 100K jump in the 2 months after December. This is uncommon for that time of year. Typically that jump happens March, April, May, when that spring market's really coming up. So essentially we're seeing like a pre-spring market bump in average and median price sales. So the market shift is no homes available in December, January, February, prices taking a big jump. And we're going to get to that in kind of the next data point. But same thing has happened this year. December 2021 inventory was the lowest it's ever been, 2 weeks. Lowest it's been in as long as I've found data on, essentially, for our market. And it took a sizable jump, almost $100,000 average or median price jump in that 2 months.
That almost looks like an exponential curve as our prices go up. If that's any indication, and we probably don't want that as Canadian real estate investors, honestly.
It's not sustainable, is really what
it really isn't, right? And I did want to ask you, and I don't know if you have it in here, but what have you seen since we've had the international conflict and the rate increase kind of paired together? I've heard a lot of people say the market sort of slowed down a little bit. Have you seen that in your market as well?
Great question. And that leads into my next point. Within the last 2 weeks, we've seen showing activity fall off a cliff. This is the last 2 weeks. So just to preface this, Broker Bay is an app, scheduling app that agents can use on their listings to schedule and record the volume of showings, right? We use it for ours. It's a fantastic system for what we need it for. And it does record data. It does come with a disclaimer saying that this data isn't 100% accurate. But this is one tool that we use to prepare our listings and our sellers, but also indicate our buyers on how aggressive or active our market is for other buyers, how many showings are really going on. This isn't our primary piece of data we look at all the time, Andrew, but it gives you a really good indication that literally showing activity has dropped by 60% in a 2 week period. Mm-hmm. So there was 100 buyers out looking last week. There's now 40 looking this week. And it's not because they've all purchased properties. There's literally the less people going out to view homes right now. So it's
a lot of uncertainty, right? People don't know what to make of situations. Maybe they're thinking, well, maybe we should see how this plays out before we make a decision. So I don't think this demand goes away, but I think it does present an opportunity. I think, the same thing when the lockdowns first started, we saw every market sort of took a little bit of a dip. And then after a month, it was hot as ever. And
you got it.
No one can say that's what's going to happen here, but people are doing that wait and see thing. And that seems to be where a lot of opportunity happens.
I couldn't agree more. I think there's a lot of people that need a market to take a little bit of a dive because prices have gone up so aggressively, but you have to think about it not necessarily with the data for a moment. If prices have gone up as aggressively as they have in the last 2 months, a market cannot continue to appreciate that aggressively. It is super unsustainable. You also have to realize we're looking at very short-term trends as real estate investors. These are good indicators for what type of market you're in now and what type of sandbox you're playing in now, for lack of a better term. But you need to have that long-term mindset before you even look at these items. These will help you make your decisions now, but with the anchor and with the plan of a long-term play. Even if you're flipping, even if you're burring, even if like your strategy for your next property is, a 3-month or a 6-month strategy, you have to look at it with a much longer time horizon. Wealth is created in the buy and the hold. There's a lot of value to that. So what you just said is huge. Is this screams opportunity to me. We have put all of our buyers and our investors on blast saying, look, market is a little weird right now. There's less people out looking. Sellers don't know how to react because some agents that are listing homes haven't lived through this type of market. But this exact same thing happened almost at the exact same time last year.
Was it last year or 2 years ago? Were we talking?
Last year, around the same time of year, took a little bit of a breath right after February in our market. Okay. And we've had pockets. Typically, it's in the summer or right after the fall, leading into the kind of that December month, right? After the summer, majority of mom and pops that are buying and selling primary residence need to be in there for summer when the kids are in school. Makes sense. Yeah. So there is some leftover inventory kind of around that June, maybe July. People trying to sell it while it's still nice out before the end of the summer. And there's a little bit of market, a little bit of inventory sitting on the market ready for people that are savvy and ready to go to pick it up. So for now, we're actively looking. We have clients that have recently purchased within the last few days as these shifts have really started. And now we have investors that were kind of hesitant because they expected prices to increase like they had in January and February, where we're coming back to them and saying, hey, look, we could probably scoop up someone where we may not even have to compete for a property now. Yeah. Some people aren't even holding off offers. They're doing 24 hours irrevocable on offers. Some properties have listed and rejected all their offers because they were expecting prices to continue to increase, and the market's saying, hey, you know what? We're kind of where we should be, if not a little higher. We're just gonna wait and see what happens. And that's why buyer showing activity has really dropped. So for buyers and investors, I see opportunity.
Yeah, definitely. I mean, the key question is, and I think this is probably a good segue into what we're going to get into next, is are fundamentally cash flowing, we'll call it fundamentally cash flowing properties, still an option, still a possibility in your region?
Absolutely. Absolutely.
So I'm sure we'll see some examples of that, right?
You got it. So we're going to jump back over into the presentation, guys. And this is when we're going to talk about our investor hot list. Andrew, we briefly mentioned on our last video, for investors that are, one, curious about what types of properties and deals even come up on our market, you can go to our website, phippsbrittainrealestate.com/contact. You put in your contact information, drop the investor tab. You say, Zach, Matt, send me the deals. I'm looking for X. Or, hey, Matt, Zach, I don't know what types of properties are there. What's available in Waterloo Region? I'm doing some research. And we can follow up appropriately. And this is, if people want to be on our investor hot list and you're actively looking, you're pre-approved, you're ready to go, you know what types of deals you are. Matt and I look at every single multi-unit deal that comes up in Waterloo Region as soon as it comes up. This is a market we are very active in. And if it is a good pick and we think it is an option for a buyer that offers value, then we send it out to the people that are on our hot list. And we're going to go through some deals and examples of deals that have either recently sold or are currently active in our market that are a good fit for specific types of investors at the price point and the cash flow that it offers. Okay. So first and foremost, 23 Fairview. It's a little 1.5 story. It's listed for $649, sold for $750 about a month ago. It's an up-down duplex in downtown Kitchener. Sorry, guys. I had to use the abbreviation DTK for all the locals, DTK downtown Kitchener. Vacant 1 unit. Parking has more than 2 spots, which downtown is fantastic. It's in move-in ready condition. And the biggest thing I loved about this one was the price point. All those other things great, but the price point. You're getting a legal duplex in a downtown market that's move-in ready for $750. This is a great buy. I love this one.
What would the gross rents be on that, like current market rate?
Current market rents, you should be getting $3,200 to $3,500 a month on this. And if you're picking,
that could cash flow or break even-ish.
We're going to get there. That's more than cash flow. That's fantastic cash flow. This purchase price was very low. This is very low. This sold about a month ago. Whoever scooped this up, great deal, right? Big thing is price point. A lot of investors are coming in and prices are tight, especially if you want to pick up your first property ever or your first investment property and you're just working off a primary residence. You don't necessarily have the bigger budgets to go into the millions. So a lower price option, especially downtown. We're big fans of downtown. We think there's a ton of value as that area gets cleaned up. We think they're going to do very well on this, whoever purchased it. 14 Sterling Ave North. $799 list price, been on the market 2 weeks, up down duplex, downtown Kitchener location. Main floor unit has 2 bedrooms in the basement. Ceiling height's not great in the basement, but main floor unit vacant. You can uplift that unit with about $10K, and you can be renting out the main unit for $2,000 to $2,300 a month. all of a sudden you're positive cash flow about $150 a month on that without even turning over the upstairs tenant. You're right downtown, walking distance to the Ion Rail, parking for 4 or 5 in the back. I think something like this, perfect for a house hacker that's looking to either buy their first home or looking to leverage into their first investment property. You can live on the cheap, or you can use that as an opportunity to fill the vacant main floor unit after you've updated a little bit. Relatively low amounts of capital and energy to get it up to speed and get current market rents. So even if you're a newer investor that you're keen on the downtown Kitchener locations like we are, under $800K, fantastic price for a property like this. You would need to turn over the other unit to get great cash flow, but would break even plus minus $100 if you just put 5 or 10 grand into the main unit and get it rented and leave it as is. I like that it's in the lower price points for duplexes as well. So if people don't necessarily have a lot of buying power, this could be an option for them as well.
So more typical duplexes, like your 1,000-square-foot bungalow that they convert the basement, what are those going for right now? I'm sure we'll see some examples, but just generally.
Generally speaking, if it's turnkey, you're looking at around 1 to 1.1 million.
Okay.
And around that 1.1 million, if you're getting it vacant or you have current market rents, is where you're about 100 to 150 bucks in the green. If you can get it lower, or if you can do some forced appreciation, you can be a little bit more active in building in some equity, then that's where the numbers really start to look a lot better.
Okay.
Great question though. And then 108 Belucher Street. So I showed this one when it first came up on the market. Wasn't the right fit for the buyer that we showed it to, but they recently price dropped to $599 and are holding off offers because they've been on the market for about a month and didn't get anything. This one's interesting because it's an up-down style duplex with a third in-law suite in the basement. Really common for downtown locations. So it's only a legal duplex. The basement's kind of a cheater in-law suite. The ceiling height it's not good enough for a legal unit. You'd have to dig out the basement. It wouldn't be worth it for the amount of cost it would take. But you get a vacant main unit, downtown Kitchener location. If you're willing to house hack, rent eviction, or move in to one of the units, that will instantly boost the cash flow because the tenants that are in there in the upstairs unit, very rentable space, wouldn't need a ton of money to get it up to speed market rents, but it is getting low rent in the upper unit. So downtown locations, that's kind of the trade-off. Premium location, probably getting at least one unit with depressed rents. So if you're able to turn over units, if you are looking for a property for yourself to live in, you can use that to your advantage and live on the cheap. If you really want to go full house hack, live in one of the rooms, rent out the other. There's lots of options for newer investors or people that have that option on the table.
Okay.
Right. And then boom, here we go. We got the bungalow up down, just like you asked, my friend. This is at 95 Patricia, very rentable location, walking distance to 2 large plazas on Highland, and your walking distance to the Belmont Village, which is really starting to get built up in between uptown and downtown Kitchener. Up-down legal duplex, separate hydrometer, double wide parking. This is a great option for people that want a house hack, but still want, a little bit of a higher quality living space, because you could live in the 2-bedroom in the basement if you want to go cheap, or if you want to live a little bit more luxury, you live in the 3-bedroom upstairs. That's an option for you as well. Separate laundry. But the thing about this is they're getting $1,400 upstairs, $1,300 downstairs. For our market, that's low. You could typically get, for a bungalow that's a 3-bedroom, you're getting at least $2,000 up, at least. And you can get $1,600 in the basement for a 2-bedroom all day. Where your numbers kind of got to be, Andrew, is you need about that $3,500 a month. You need about that $3,500 a month for a turnkey duplex to really cash flow it well. That's assuming 20% down. That's assuming about 2%, 30-year AM. That's already accounting for closing costs. That's already accounting for carrying costs, utilities, maintenance, the whole 9. That magic number is, like I said, 33 on the low end. But if you're around $3,500 a month in total rent, you're definitely going to be in the green.
At an $850 purchase price.
That's even at a higher purchase price.
Even
at
at
an
a higher,
$850, you need closer to kind of that 32, right?
Okay.
So if you come in and you increase the rents by about $600 or $700, which you can do if you turn over one of the units, you're there. So we like this one, and the purchase price is $850, not holding off offers. So you can come and bring an offer on this right away. Conditional offers may even be a thing now in our market in the coming weeks. So if there's buyers that need to have assurances with financing or inspections, I'm not promising anything, but it may be an opportunity.
I'm just curious, and we won't go too tangent here, but are there any opportunities that you're aware of from like a zoning standpoint? I know maybe third units in the backyard might be coming or might be available in certain zones.
Yeah.
Or can you park a trailer in your driveway and rent it out on Airbnb? I mean, just kind of thinking out loud here. It's
I love thinking out the
just to pad
box.
that a bit more.
I love thinking out the box,
Yeah.
outside of the box. And that's something that we were pretty much forced to do last year, as the purchase prices for properties that were going to be converted into duplexes or converted into duplex with tiny homes or additions, as that zoning changed in our market. If you guys aren't aware, we've discussed this on some future or on some previous videos on the Canadian Real Estate channel. But for specifics, if you're looking at what zoning you need, what types of properties you need for tiny homes or duplex conversions or additions, that's a market that we are very active in for ourselves and for our clients. So we can send you guys examples and some of the criteria directly. For this type of property, you wouldn't be able to. You're on a corner lot on this one, and you just don't have the space. But
Yeah.
for these two, boom, we're doing additions, we're doing tiny homes. You can convert these into pretty much, for lack of a better term, a legal triplex. You got the zoning for it.
So when you say tiny home, you mean a detached unit in the backyard?
Yep, you got it.
Okay, and the zoning will allow for that.
Yep. And so one thing that I didn't state, but maybe somebody's paying attention would notice, is all these properties are in Kitchener. Kitchener is basically saying, hey, we need the units. We will work with you if you are going to put new units in. We need the inventory. We need the space. Pretty much anywhere where you can buy a single family detached home, you can probably either put an additional unit in it or put a tiny home, or both. Like, that's an overarching statement. There are very specific requirements, guys. So as an investor, don't just go and buy anything. But their mandate is they want to work with people who are putting in units. They would much rather work with people and have it done right, regardless of like what they're going to do. They don't want people kind of going without permits. So they're saying, hey, bring us everything, we'll work with you. So whether it's minor variances, whether it's, having permits approved quickly and getting inspections done, they want to work with you. So
yeah, my quick tidbit there, like what I would do, and hopefully we get back to a day where you can go in and see people face to face, show them an example, show them this address, say, hey, can you look this up? What if I did this there? Would that be okay? Even if you don't own it, city people will answer those type of questions.
That is a fantastic piece of advice. Another piece of advice that we gave at a previous video, Andrew, is in our market is understanding how the permit and building department work. In Kitchener, they're mandated to get back to you within 10 days of a permit application, your first permit application, not revisions though. So if you put in your permit right the first time, smooth sailing, baby. If you mess it up, if you put it together on a napkin with a bunch of crayon and a couple of references, see you later, guys. It's going to be months before you get anything done. They're not going to want to work with you. You're going to be difficult to communicate and work with. So they're just thinking, this is a big headache. So you get your permit application in and done right the first time, much, much better for investor. You're saving on time and money right away.
Yeah, be thorough for sure. One thing I will say is that when they get overwhelmed, a lot of times what these city officials will do, because this isn't just Kitchener, I'm pretty sure that's an Ontario-wide thing. So a lot of cities have a similar requirement. They try to look for something they can catch you on. They're like, oh no, we found this. You didn't cross this T just right, so we can stop the clock on you. But send us this revised. So that can happen. But like you said, the better you do it the first time, the better your chances are of getting that permit through fast.
100%.
And I don't know if you ever do this, Zach, but I used to actually write in permission that I could apply for a permit before I closed on the property.
Yeah.
So
if you as an investor or a buyer are doing that, the plan for the deal is to be active on the property right away. 100%. You can even send in the signed accepted APS saying I am going to be the new owner. If you're doing it under a corp, we know the docs that you need to sign off on that you have to have available. So you send it to them in one neat little application with everything you need. That as they're going through it, it just shows that you're prepared. You're going to be easy to work with. You have your stuff together. That's the type of investor that you want to be. It'll make your life a lot easier. You do not want to make enemies with your local bylaw or building division if you're going to get into this game. You want to be somebody they want to work with and is easy to work with for sure. So for these two deals real quick, bungalows, you'll notice all brick builds. The one on the left is a walkout. The one on the right is not. Both are zoned and have the ability to put tiny homes in. They're selling in the low to mid millions, as is if you get current rents for them, which tenancies are still very low. Getting A tenants in Kitchener, depending on the area, is quite easy. It's just a matter of how much you really want and what kind of services you're providing. But in-suite laundry, lots of parking. The one on the right on Hillside's got the garage, so an extra bonus. You're bringing in $3,500 a month on these minimum. And that's where you're starting to make your 100, 200 bucks a month. If you got, 38, 3,900, depending if you're renting the garage space, if there's other amenities at the property that you can leverage for higher rents, then this is a perfect opportunity for your turnkey investors that are looking for exposure into maybe their first multi-unit, or they've had some good experience with an investment property and now they want to step into a turnkey property. They don't want to be active. They're not house hacking or living in it. They're not doing cash for keys or any major renovations. You purchase it as is, and the numbers still look great on a 5-year horizon. I know for any investors that are wondering, okay, well, how are you're just saying a lot of these things like, oh, you can get this rent, or it's worth this cap rate or this cash flow. For anybody that's having trouble understanding those numbers and how we're jumping to them as we're going through them, we have spreadsheets that we use. Andrew and the Canadian Real Estate channel has like deal analyzers that you can use. We've gone through them in past videos. He's got stuff on his channel. Canadian Real Estate channel has lots of that as well. That is a really good tool that you can practice on your own. That is invaluable. As an investor, you can rely on people like me in our local market to say, that's a good deal, that's a good deal, that's a good deal. But if you want to be an investor and you want to, take it seriously and be successful, that's a skill you're going to need to pick up, and you can practice it on your own. So reach out to us if you need resources for that. But these are, solid examples of well-built homes that are legally converted with long-term upside if you want to add additional unit or a tiny home, but they cash flow positive as is. So you can literally, get your tenants in there and you're smooth.
Yeah, for anyone who wants to check out my deal analyzer, you can just do it through my website, andrew-hines.com, and then there's a menu tab for cash flow.
It's fantastic tool, guys. Like, not to pump Andrew's tires too much, but like super easy tool that you need to be familiar with. You can't necessarily rely on other people to do that for you. For our clients, we like to teach them how to use those types of tools so that as we're sending them listings, making some suggestions, they can kind of run their own numbers and we can compare. Some other investors just say, hey, Zach, I'm looking for this in a deal. Go find it for me and we'll take it. Okay. But you kind of need that experience and that trust to get to that point. So a good piece of advice from Andrew, get a deal analyzer, get used to a spreadsheet, run your own numbers.
Yeah, it's like paper trading, right? Like before you trade on the stock market, you do paper trading. Before you go out and buy properties, you start getting familiar with the numbers and how they work and what you need to find, and what you can expect before you actually go and approach someone like Zach and pull the trigger.
Absolutely. And just another little tidbit for kind of turnkey properties. If you're not going to be investing a ton of time, energy, and capital into let's say a multi-unit property, if you're getting around a 4% cap rate at purchase with very little extra working capital in our market, that's considered quite good. If you want to get higher cap rates, you're going to need to be a lot more active in what you're doing with the property. But for turnkey investors, that's kind of your benchmark. Speaking of investors, 77 Second Ave, listed at 1.199. This is actually a listing of myself and Matt. This is a 4-unit brick build. It is in the Kingsdale, Fairview area. If anybody's familiar, it's right by Fairview Park Mall, close to the highway in the 401, but you're also close to downtown Kitchener. This neighborhood has been blowing up for the last 10 years because as they announced changes to the local transit, our Ion Rail Hub is out of Fairview Park Mall, and they're reinvesting in Fairview Park Mall. All your amenities are right there. You're right by the highway. It's basically, if you're coming into Kitchener from the 401, you're going to kind of have to come through Highway 78, and the mall is going to be, if you're coming from the GTA or London, the mall is going to be on your left. You're going to see a big old furniture store on your right, and that's the exit you're going to take on Weber there. But this is 4-unit brick build, 53 by 132 lot, R6 zoning, and a triple detached garage out back. If you take a look at the photo on the right, guys, that's a brand new building. They're building a 4-plex right there. They knocked down an old home and they're building 2 semi-detached, it looks like, that are going to be legal duplexes. Fantastic. It's a 4-unit, brand spanking new. That is really common in this area. People are building semi-detached purpose-built duplexes. They're building, large detached homes, 2,500 square foot all brick builds for single family homes. This is really common. So for investors that are maybe looking for long-term redevelopment potential, this type of property would be an option with the zoning, the lot size, and what's happening in that neighborhood. If somebody's looking for something that they just want to buy and hold for 25 years and become a cash cow, the purpose-built triplexes and 4-plexes in our market still offer that potential. And it's a fantastic opportunity for anybody that's looking for a BRRRR project. If you're looking to BRRRR a multi-unit in Waterloo Region, we love this as an opportunity for that. depressed rents. Everything can use a little bit of a facelift, but it's not like you're going to have to gut the whole building and take it to the studs. And we like it because there's opportunity to add additional units and bump rents aside from just doing the typical lift of the units.
You think there's an opportunity to add to this specific property, or just in general?
This one specifically.
Okay,
Yeah.
maybe go up higher and build up.
I don't know about up, but out the back, there's a triple detached garage and there's space for parking if you take that out.
Okay.
So,
I mean, it'd be interesting. Yeah, you never know what bylaw will do in the future. And I always say this on my podcast, buy houses and properties that are, have extra land, because you never know what might happen in the future. They all of a sudden open up new opportunities, and something that wasn't worth much to you is now worth a lot to you.
You nailed it. And that 53 frontage, we like to see that.
Yeah,
above
nice
50 frontage is fantastic. 132 is deep enough. So look, these properties are set back a little bit because they're purpose-built brick builds. Really common. The European builders and developers that were building up Kitchener in the 60s, 70s, and 80s, these were very, very common. A lot of them had family members that would buy them and live in them for 20, 30 years and take care of them. And so for this particular one, vacant possession for some of the tenants are available, if not for all the units. So if somebody doesn't want to put anything into it, if you can take vacant possession, you do a little bit of a lipstick reno, maybe you're putting 5 to 10K in each unit, and you can raise the rents on this 1,000 to 2,000 a month within 30 to 60 days. That's a huge value lift. If you want to get even more creative and put a little bit more money because you want to hold this long term, or you see opportunity, then whether you're utilizing the triple car garage out the back or you're going to be building additional units out the back, then there is opportunity for that as well. So great opportunity for immediate BRRRR, but also for somebody that's looking to get a little more creative long term, we see opportunity in something like this. Awesome. Now, last but not least, 1418 Brubaker listed 1.5 million. It was active, but they took offers last night and they actually accepted a firm offer. They got 8 offers on this place. Super unique property. You got a duplex, legal duplex on the left, and on the right, you got a 12-unit building. Downtown Kitchener location. We like that. There's still a lot of opportunity in there. And the cost per door for this particular property is fantastic for our market. I don't have the final sale price yet because they haven't updated it. So depending on how much whoever won paid for it. But you're downtown, so a lot of the units have depressed rents. They need a makeover. So opportunity for a BRRRR, long-term hold, cash for keys, renovictions, all opportunities for this type of property. So for investors that are looking to kind of take that step above that 2, 3, 4, 5 unit type property, there's probably about a couple dozen multi-units that come to market in Waterloo Region that are, pretty decent opportunities every year. But the reality is our market's still so competitive, and the market for those properties are still strong, that you need to be actively looking, because this listing is up and gone in a week, 10 days maybe if you're lucky. You need to have financing ready. You need to know what your renovation costs are. You need to know what your short-term and your long-term plan are almost before you even go view the home. If you're not at that stage, then, get some more experience under your belt, do some more research, connect with other investors that have done those types of deals, so that when you're preparing for those, you know what you're getting into. But a really good example of a, pretty favorable cost per door, even if it sells 500K over asking, pretty favorable cost per door for our type of market. You could just, hold it and turn over the units naturally. But if you want to be a little bit more aggressive, get a little bit more equity bump in there, boost your cash flow, definitely opportunity to BRRRR this one or get some cash for keys.
Yeah, that one was priced at under 110 a door. I don't think you probably see that very often. They were probably fishing for offers with that pricing. So it's hard to say exactly where it falls. Although I will say, with a building like that, because it wasn't really a purpose-built, what would this be, 14-unit building, it is going to go a bit lower, right? Because you're not going to have the same layouts, the same ceiling heights, the consistency. And then, of course, maintenance with multiple structures is a bit higher too. But still a very interesting opportunity if it sells anywhere near that price.
Yeah, and I think you mentioned something really important that I don't think people really realize until they get into the game, and that's the difference between a purpose-built and something that has been either retrofitted or pieced together. In downtown markets, really common to have properties like this. They've been built in stages essentially, or retrofitted on old detached homes, or you're taking a large detached and converting it into a triplex. You're going to run into different problems buying and owning and operating those types of properties than a purpose-built. But purpose-builts typically sell at a premium. If you take a 4-unit purpose-built versus an old detached in downtown Kitchener that has an addition off the back for their 4th unit, the purpose built will likely be worth more money. They're a little bit easier to renovate, a little bit easier to maintain. But again, there's pros and cons. So if you're kind of teetering on, well, do I focus on paying a little bit more for a purpose built, or do I go for a little bit of a better location and have to deal with the problems that come with something that's maybe been retrofitted? Then that's something that you should probably look at both deals, get a few viewings under your belt, and look at the numbers. Numbers don't lie. Maybe those can guide your decision a little bit better than just how you feel about it.
Okay.
Right. So these are some examples. This is a perfect example for somebody that's looking to take on a little bit more of a larger BRRRR project. 77 Second Ave 2, great for somebody that is either looking for a multi-unit BRRRR, but still wants to take advantage of that juicy A lending. That's really why I wanted to bring up that example, is a lot of investors that are trying to make that jump between maybe their first or second house hack or first multi-unit into something a little bit larger. Financing is going to be a large barrier. So operating in that 3, 4, 5 unit space, there's still BRRRR opportunities for those. We're wrapping up to a triplex BRRRR and a fourplex BRRRR in downtown Kitchener from some of our previous videos with the Canadian Real Estate channel with great success. And for kind of those intermediate level investors or investors that have a little bit of experience and want to make that jump up, specifically in Kitchener-Waterloo Region, that's where we see a ton of value for investors. There's also lots of value in doing duplex conversions and tiny homes. We have a duplex conversion on Kenneth that we did a video on with the Canadian Real Estate channel if you guys want to check it out. And we'll be making plans to do either a tiny home or a severance on other projects as well. So there's still lots of value in that. And in the next kind of 2 to 3 weeks is typically where we're going to see that market really take the breath like it has right now with showing activity down, Andrew. So we're encouraging investors and buyers to really get their stuff together and take a serious look at opportunities while they're not competing with as many buyers. And that's kind of some examples of projects that we've seen recently sell or active on our market that fit into some of these investors' kind of profiles, whether it be house hacking or BRRRRing.
So Zach, I think we're kind of getting to that point where we got to wrap up, but I did want to ask you, so, if you had to boil it down to one or two, key things that investors should be doing right now to take advantage of what the market's doing right now and what you see coming, what would those one or two things be?
One, view every property that fits your profile as quickly as you possibly can. But in order to do that, you need to know your numbers. So one, run your numbers. If you don't know your numbers because you don't know the market well, reach out to a local professional, whether it's myself or somebody else in any other market, and understand what price points the types of deals you're after should sell in and what is a good deal and a bad deal.
Yeah.
And then you go and view them actively. If you're not looking at them quickly and consistently, I can't tell you how many times we've found a deal just because we went and looked at it.
Right.
Wow, this shows way different than the photos. Wow, they didn't get any offers for this on offer day. We'll step up. We'll bring an offer. Now we don't have to compete. Awesome. We're going to get it 20, 30, 40 grand cheaper than if other people offered on this. Great news for us. But if you don't look, you don't know.
If you don't know your stuff, right? Like you get to a point, if you're buying a lot of the same thing, you start to know what you're looking for. You know what it's worth. You see a deal, you buy it immediately. And if you're not at that point as an investor, there's still work to be done.
Yeah.
If you're serious about your market and wanting to make moves.
Yeah. And a lot of investors don't have time to be serious about their market. So they have to rely on other professionals. If you're going in to buy a market you don't know, find a trusted professional that has experience in those types of deals and lean on them. That's part of your team. That's why you're hiring them. And that's what their job is. Let them do their job to help you.
Absolutely. Zach, where do people find you? Let's remind people where they should go to find you.
Absolutely. So you can follow me personally on Instagram at Zack Brittain. If you want the real estate goodies, though, that is all over at Phipps Brittain Real Estate on Instagram and Facebook. For investors that want to get on top of the deals and want to know what we're looking at and where we're seeing value, our investor hot list at phippsbrittainrealestate.com/contact. There's going to be a link in the description for you. Is definitely the place to go. We're active in the comments. We like getting in touch with other investors. You want to set up a call and talk shop, or you want to be a little more serious and talk game plan, that's the best way to do it.
Okay, Zach, thanks for all the information. That was super valuable. And thanks to everyone watching. Once again, I'm Andrew Hines, a real estate investor and podcast host out of Southwestern Ontario. You can find me by searching my name on any of the podcast platforms, or you can find me on Instagram at the Andrew Hines. Thanks so much for watching the Canadian Real Estate channel, and we'll see you on the next update.